Good evening. It is 6:30. We are in council chambers for, excuse me, could I ask the people to join the meeting, please? Yeah. We're in, excuse me, can I call the meeting to order, please? We're in council chambers, general committee meeting, audit committee meeting. My apologies. May I please have a motion to approve the agenda as has been circulated? Second, Councillor Tom. Comments or questions? All in favor? Opposed? That is carried. Thank you. Declarations of pecuniary interest and general nature thereof, please. Seeing none, we'll move into delegations, and we have Giselle Bodkin and Andrea Noss, manager of and Andrea Noss, manager of BDO Canada. Will you ladies need more than 5 minutes? Tell you what, why don't I ask for a waiver right now, and we'll just, Councillor Perry, Councillor Kim, all in favor? All in favor? Opposed? Carried. So up to 10, okay? Okay. Ladies, the floor is yours.
Hi everyone. I'm just going to see if this flicker works. Okay. So I'm just going to go through the graphs of the town quickly, and I'm assuming you all have this on your screen. Can we zoom out maybe a little bit? Okay. Smaller, yeah. There you go. Yep. Now, where's the charts? Down? Okay, there. Okay, good. Now maybe a little bit. All right, so the first graph you see, the blue line is your revenue. The red line is your expenses, and the green line is your surplus. So what I see when I look at this report is the revenue is growing and the expenses are pretty flat compared to the revenue. So that's a good news story. And you are accumulating these surpluses, so I'm assuming there's going to be some major capital assets, TCAs purchased down the road, and that's why we're accumulating some surpluses. So the next graph just shows you taking your annual surplus, adding back depreciation, which is a non-cash item. And again, that's the blue line. And then the red line is what you spent on TCAs, roads, buildings. So you can see that this year you had a really large surplus and you only spent 31,000 on TCAs.
Giselle, could you
31 million, sorry.
Could you please adjust that slide?
Yeah. Yeah, okay. Go up? Oh, I might need to use the mouse, yeah. Okay, yeah, sorry. Is that the right one? Now I lost my mouse. Okay, here's the mouse. Oh, are you moving it on me? Can you do like a page view or something? Okay, thanks. All right. So if you can see 2015, you had a surplus plus amortization of 55 million. Your TCA additions were 51 million. And then in 2016, you had this surplus of 55 million, which includes, again, we add back depreciation, and you spent 31 million on your capital assets. So your net financial assets, that is your total assets excluding TCAs. That's your cash, AR, inventories, prepaids, minus all your liabilities. Almost like your working capital. So you can see, because you've had these surpluses, this number is now about 76 million. Okay? So another positive thing. So this graph says, well, what's my accumulated surplus? All the money we've made in the town, 529 million, and of that, 452 million is your capital assets. And the difference between those two numbers is your working capital that I was talking about on the previous slide. So just want to maybe flip to, so in other words, you're in excellent financial shape. But if tomorrow you said, I got to spend 100 million on roads, that would wipe out the surplus in 1 year. So if we go to your revenue, most of your revenue comes in from taxation and user fees, which is the blue and the red line there. Nothing's really changed from 4 years ago. And again, if you look at your expenses have gone from 65 million to 80 million. 4 million extra in general government, 2 million in protection, 2 million in transportation, and environmental. More money's been spent on environmental. But I guess the important thing to note is that the expenses are going at a slower rate than the revenue from that other graph. So if you look at where you're spending your money, again, these pie charts are exactly the same as they were 4 years ago. 35% is going to salaries and wages, and 41% is contracted services. So from an audit perspective, we always look for trends. If everything is the same, every year we audit different items, and we're always happy when things are the same as prior year, so it doesn't look like anything unusual is going on. I have some industry data to just kind of share with you. So we put a bunch of other municipalities in here. So the first graph at the top, again, that's your net financial assets, which I said was kind of your working capital. That's your cash, your AR, your inventory, minus your payables. You can see the town of Aurora. This is only in 2015 because we don't have the 2016 numbers. We have your number, but we don't have everybody else's. So just to show you that last year you had a cash working capital surplus of about 53 million. Now you can see other towns are negative, and then town 5 is around 61 million. And if you look down below, it shows what the towns are spending on capital assets. So if you were going to look at town 2, you could see that, in 2012, they spent 45 million on capital assets, which probably put them into a negative. So you're setting a budget, and the budget is for operating expenses, but it's also for those big capital assets that happen. And when we get to the financial statements, we'll show you what you've been spending. So there's kind of a comparative of the revenue. I'm not going to go through all of it, but you can review at your leisure. And also looking at the annual surpluses. So again, town of Aurora, compared to the other towns, had the highest surplus this year. But accumulated surplus is in line with town number 5, which is cumulative. So you're very comparable to other towns your size. And then another thing I do is I say, well, where do you get your revenue and where does everybody else get their revenue? And you can see that these pie charts are almost the same again. Your revenue components is very similar to other towns. And then I go to expense and I say, well, what's the industry average for expense? And you've got a little more in contracted services than the industry average. Depends on what you're building. So there was nothing in the audit to show us to be concerned. as far as the trends and the graphs and the charts. And the last 2 pages on here are just the role of the audit committee. And I'm not going to go through that, but again, it's something you can read. You're to meet or discuss with the auditors twice a year. You're to tell us if there's anything fraudulent or anything you're concerned about. If somebody from the town came to you, pulled you aside, and wanted you to look at something, then we would have to change our audit plan to maybe look at something like that. So we're supposed to have communication with you twice a year at the planning meeting and at the end. And that's one of our CA standards. And you're to appoint the auditors and set the auditor's fee. And we are out for tender right now. The N6 is out, just so you know. So hopefully we are back next year because we like working with everybody here. So I'm going to pass it over to Andrea to talk about our planning memo.
Final memo.
Final memo, sorry.
Hi everyone. So if you remember, when we were here last year. We also gave a presentation on our plan for the 2016 audit. And this is our final report on the 2016 audit that we are presenting today. So I'm just going to go through some of the highlights here. So we start with the status of the audit. And as of today's date, we've substantially completed our audit of the 2016 financial statements, pending completion of a few items that I'm going to highlight. And we will need to complete those before we can issue a final auditor's report. So we're going to start with we need the receipt of the management representation letter, which is in the final appendix at the back. We're still waiting on some legal confirmations, and we have to have those up to today, so we have to get those updated. And we have to do our subsequent events review up to the date that the statements are approved as well. And once all that happens, then we will be able to release pending the approval of the financial statements by council. Okay, independence. So when we were here last year, we confirmed our independence with you for both the 2015 and 2016 audits, and nothing has changed since then that would impair our independence at all. Materiality. So when we were here last year, we had given a preliminary figure of 1.45 million. Of course, very preliminary because we were only 6 months into 2016 at that point. So of course we had to update it when we actually got the numbers for 2016, and which ended up being higher than originally anticipated, and therefore we raised our materiality level to 2.15 million. Okay, so then just highlight management override and controls. That is a risk that's present at every audit. We discussed in the planning letter last year. So we have specific procedures that we have to do over journal entries and significant transactions, and we completed those, and no exceptions were noted, nothing outside the normal course of operations for the municipality. Okay. Adjusted and unadjusted differences. That we'll get to in Appendix C. Management representations, that'll be in Appendix D. So I'll go to the, no, we'll keep going. Yeah, fraud discussion. So this is, as Giselle brought up earlier, that we do have to bring this up to you every time we come and present to you. And it's just, we have to update if there's anything that you need to communicate to us in regards to any potential suspected, actual, or alleged fraud. So this would be a great time to tell us that, if anybody has any concerns in that area. Okay, great. We also look at your internal controls as part of our audit, and we consider risks around those controls. And I'm pleased to tell you that we did not find any significant deficiencies in internal controls during the course of our audit. Okay, now we have a list of items that I also need to go through with you. So we've done the legal letters. We just don't have the responses back. But based on management's assessment and the legal department's assessment, we don't foresee any additional disclosures or liabilities to be set up in regards to legal matters. The representation letter, that's in Appendix D. We'll get to that last. Material uncertainties that might cast doubt on your ability to keep as a going concern. Well, we've just looked at your finances. You were very well able to keep going. There were no disagreements with management. There were no non-compliance with laws or regulations. No significant related party transactions. No subsequent events or modifications in opinion. There are no additional paragraphs in our audit report. No significant matters that we had to correspond with management on. No significant accounting policies, estimates, or judgments that required any additional work. Management was completely cooperative throughout the entire process. There were no limitations of the scope of our audit. Have I moved on? Oh, there we go. Sorry. And no significant findings from the group audit either. Okay. All right, so appendix. So this is a draft of our auditor's report. It's the exact same report as last year. So I'll get to that in detail when we get to the statements. This is an update on our independence. There's no changes there. A couple items in the unadjusted differences. There are some negative accounts in your accounts receivable, which you could reclassify or not. It's not a big significant issue for us, so we were fine just to leave it as it is. And then a bit of a timing difference on one of the progress billings, but again, nothing that we required to be adjusted. And there were no disclosure omissions either. Okay, so then the very last attachment, the very last appendix is what we call our representation letter, and this basically summarizes all the items that management represents to us that they are telling us during the audit that we need to know about your operations. Okay. Anybody have any questions?
Thank you. First of all, could I have a motion to receive the delegation, please? Councillor Thompson and Councillor Kim. I've got Councillor Thompson, Councillor Gardner.
Thank you both for coming here again this year. I just want to go back to that summary of unadjusted differences.
Yeah.
Just if you can just sort of explain it a little bit more in detail. Are you talking about that it was revenue that wasn't accounted for?
No, it was, there was a reclassification. Like if someone, in accounts receivable, if someone pays more than their accounts receivable, it goes into a credit balance, and usually that's got to be put as an accounts payable. So it doesn't affect the income statement. It's just a classification, and it was $143,000. Again, your materiality is $2 million, and most towns would not make that adjustment. And the second adjustment, I'm just trying to find it here. You know about that one.
Yes, the second adjustment, where it straddled 2 different years, it would just make it more difficult administratively to be keeping track of that one particular progress payment if we had tried to adjust it. And it was small enough that we said, no, we just leave it as it is.
Thank you. And there was that notation where it says 2016 progress billing recorded in 2017, which just sort of threw me off. So appreciate the clarification.
Yeah.
I do have a question for Mr. Elliott, but will there be time afterwards, or?
Why don't we bring the report forward now so we can just...
Well, there may be other questions of presenters, but...
well, I've just got... Oh, okay, I've got 2. Right, we're going to run into a time crunch here, so I'm going to ask people to be quick. Sure. And I apologize for that. Councillor Gardner.
Thank you. I'm looking at page 12, attachment 1. And
I think it's that one.
No, I'm not. I'm looking at page 10, attachment 1.
10 of 68. Just making sure I'm on the right one. That's 14.
So it's the 2016 revenue?
Yes.
Yeah. Okay. There we go.
So it's a comparison of our town and other towns?
No, this is...
This is just our town and our town?
Yeah, it's just your town between 2016 and 2012.
So the tax is 32.69. It was 44.83. We got our revenue there. We're getting much more revenue in user fees now.
Yes, that's right.
As a percentage of your tax revenue, yeah.
As a percentage of overall revenue, yes.
It's a big change. Is there any comment, any concern about that?
Could you speak closer to your microphone, Councillor?
It's a big change. Is there any comment or concern about that?
Yeah, go ahead.
Mr. Elliott?
Through you, Mr. Chair, I believe that one of the influencing factors there is going to be the amount of development charges that we were collecting in 2016 versus 2012, and that we were spending. Development charges are only recognized as revenue when we actually spend them. And so that's tilting this graphic in that direction.
Councillor?
Thank you.
You done? Thank you. Councillor Kim?
Thank you. Thank you again for coming back, and we enjoy working with you guys as well. My first question, the comparable towns that you listed, where are they in the development curve, or in terms of the population build out? Are they in the same level where they're about 90% built out, or are some of them quote younger or more mature?
Well, are they the N6? Most of them are the N6, right? Yeah, they're mostly the N6, and it's all, it's nothing confidential, because you can go on their
Everybody
website
can go online and look at it
and see that. But yeah, I think Town 5 is Newmarket, and I think Town 2 is King.
Okay, thank you.
And then Stouffville. So they're all around here, and they're all in the building phase, I would say. None of them are old towns. I used to do the town of Penetang. That's really old.
Thank you. And my last question is, I know it's does your firm I guess this would be more consulting than auditing, but I know when we audit, we look back in terms of due diligence. Do you also offer services in terms of looking at future planning and whether the planning is within certain parameters, or it's healthy, or do you provide that? And do other municipalities even request services like that from your firm?
We did do a tangible capital asset management plan with the town.
Okay.
Yes, I've seen other municipalities do those studies. I know the city of Barrie had a study done about 5 or 6 years ago, looking at what are the expenses coming down the pipe. And I remember going to that presentation. I remember there being like 50 million, or no, I think it was like 200 million had to be spent on water and sewer, the city of Barrie. And I remember the city of Barrie had all these reserves. So I'm not sure. We do have consultants in our firm. They might be able to do something like that.
Okay, but we're not
but they're a different department. But
okay.
If
go
you can
ahead.
come back to the
No, that's
please.
fine. I just needed a yes or no. Thank you.
Okay.
Any other comments with respect to the presentation, please? Okay, so all in favor of receipt of the presentation, please? Thank you. No opposed, that is carried. We've only got a couple of minutes left. We're going to bring forward the report, please. Put it on the floor, Councillor Thompson, Councillor Peary. Thank you, ladies. You can.
Thank you. Thanks, everyone.
Thank you.
Councillor Thompson.
Thank you, Mayor Daw. And it might take a little bit more time for the explanation, so I'm fine if Mr. Elliott wants to come back and provide some details. But just going back to the 5-year expense comparison, it talks about our figures in 2012 versus 2016, and one of the ones that I just want to get some more detail on is general government. In 2012, it was $9 million. 2016 is $13.5 million. So we've seen a 50% increase in our general government costs, and I'd like to get some more details as to why we've seen such a significant increase over that span of time. And I'm fine if Mr. Elliott wants to dig into it a little bit, given the shortness of time, and provide either an email answer or at a subsequent council meeting to explain why we've seen such an increase in general government costs.
Mr. Elliott?
In short, it's explainable, it's logical, and it's 2 pages of legal, and I'd be happy to email it to you. We'll just clean it up a little and email it out later this evening.
If you could email everyone, obviously.
Absolutely.
Thank you very much, Councillor Thompson. Councillor Gardner.
A similar question on the same page with respect to environmental services. I'm not exactly sure what everything that encompasses environmental services. Is that water, wastewater? Yes?
Mr. Elliott?
Through you, Mr. Chair, that environmental includes the water, the underground infrastructure, and storm. So it's water, sanitary, and storm.
Thank you. And that's because we've really increased our population?
It is. We had 5 subdivisions that we assumed
Thank
during
you.
2016, and so there was a substantial step up in our assets assumed and also the amortization of those assets.
Thank you.
Thank you, Councillor. Any other comments or questions? Then all in favor of receipt of the report, Mr. Elliott will be forwarding that information on to us. Opposed? That is carried. Motion to adjourn, please. Councillor Thompson, Councillor Marakis, Councillor Gardner, all in favor. Opposed? That is carried. You have 3 minutes before we start council.